Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Researching, also known as doing your due diligence, is one of the most important things when it comes to making an investing decision. In some cases, your research can lead you to an amazing stock that can help to build your wealth. In other cases, some poor research or lack of research can lead you into making some very serious mistakes. So in today's video, I want to give you, let's say, my 3 to 5 step investing process or research process, where I get certain pieces of information from and how I personally make my investment decisions. Now, we did do a video about this last year, but I want to do a bit of a refresh. A lot has changed over the last year, and I have kind of tweaked a few pieces of my investing process. So in this video, we're going to talk about what that process is and kind of walk you through my investment decision. I'll use a stock that I think is relatively popular that people are kind of looking into and just give you my thoughts and opinions based on when this video is coming out. Obviously, companies improve or deteriorate over time, so this is definitely a time capsule. And we use the information that we currently have to just give you my thoughts. Now, this will be the only time you see me on screen. We're gonna go to screen share as I walk you through each of these steps, and I will kind of give you the verbiage as I'm going through and thinking of this. Now, your research process is totally fine to be different, okay? You don't have to do every single step that I do. This is just my personal process based on my experience as well. It helps for me, not for everybody, but it helps for me that I have a background in economics. So when I talk about context and understanding what's going on with the Fed and supply chain and all that kind of stuff, that's just something you learn with practice. That's something that you learn just from reading on a daily basis. We talked about that in our members only when it comes to the 5 successful habits of investors. So that takes time, that takes experience. That's why you're here. That's why you're liking and subscribing. All right, so let's go ahead and get into the video and discuss these steps for your research process.
Let's go ahead and jump into it. This is McDonald's. This is a company that I do not currently own, but I'm going to quickly kind of walk you through my thought process if I'm looking to invest in a company like McDonald's. So the first thing that I want to do is understand what McDonald's is. Now, I don't know about you, but obviously McDonald's is one of the more popular companies. I'm not going to jump into a whole bunch of information about McDonald's because, again, I think most of us know McDonald's. But one of the best places and easiest places to do this is on the investor relations tab. We've talked about this before, and you get the most information from their annual report. So I'm not going to scroll all the way up because I have to go back down, but this is their annual report. It is 67 pages long, so obviously we're not going to go through the entire thing, but I will show you the highlights. So here is the table of contents. You get their business summary, which I think is extremely important. So yes, we might understand McDonald's, but I covered the Carlisle company the other day for our members only. If you're looking at something that's a lot more complex, even something like NVIDIA, which we did cover, that's not as easy to understand. So going to the annual report, even if it's a little more outdated, so this one's for 2021, we are very late into 2022, I can still learn the most about the business and what they're trying to do, but I might go somewhere else to get the most recent information. So what I like to do is start off by going to the business summary for McDonald's. It's on page 3, and it tells you the description of the business. So again, we're not going to jump into McDonald's because we know what McDonald's does, but here's a healthy description here. They're in 119 countries. It shows you what the growth is. Here, 93% of them were franchised, and you can read more about exactly what they do. You can also find this in the quarterly report. The quarterly reports aren't as thorough as the annual reports. So here we go. So we got the description of the business. This is always where I start off first. They tell you a little bit about their conventional franchises. This is, from my understanding, I can buy McDonald's, but we got $2 or $3 million laying around, which I don't. But in either case, tells you their conventional franchises, how they develop their developmental leases or affiliate side of the business, and then kind of go into some other things about the business. So when I talk about understanding what a business does and what a company does and why it is supposed to succeed or fail, this is where you get a lot of that information. You definitely, in my view, want to look at something like this. Now, if you go to public, there is a small description of what they do here. We'll click read more. But again, this doesn't this doesn't tell me a whole bunch. Like, sure, they have a Big Mac, quarter pounder, filet o fish. Okay, that doesn't really tell me that much about the franchises. It does tell me that they are in different countries, but again, I want the deep, detailed information here. So this is usually where I start. I want to know what I'm investing in. I want to know what you do, how you do it, how their business is divided up, and all of that. So this is step one in that process. Now, the next step that I want to know is, how is this stock performing? Before I decide to look deeper and look into the financials and do all this extra stuff, I want to know, are you doing well compared to the overall stock market? So there are two ways that you can do this. One I like better than the other. The first, and you can do this on a bunch of different apps. But first, I can go last year, it's up over 12%. That's pretty good. I can go here and say over the last 6 months, it's up 17%. Okay, great. But that does not tell me a whole bunch of information. So what I do like to do a bit better is go into Yahoo Finance, and I want to compare this to see, is that good? 12% in the last year, 17% in the last 6 months. Is that good? Well, the first thing is, I want to compare it to the S&P 500. The S&P 500, largest 500 companies. I need to know, well, what is the market doing? Now, this tells me a lot more, right? Last 6 months, and Yahoo Finance and Public, depending on the dates that you're specifically looking at, can be a bit different. But in this case, I'm looking here. I see McDonald's is doing quite well. The market is not. Market is down a little over 6% in the last 6 months. McDonald's is up double digits. This is great, right? When I was looking at it here, I don't have any context here. I don't know if this is good, bad, or indifferent, but this Yahoo Finance, which is free, by the way, gives me a lot more information. So this is one layer. That's great. Let me just look at it over the past year. Things are even better here. They really have started to move in opposite directions, I guess, since March of 2022. Sounds good. Great for McDonald's. This is getting me excited to potentially look to invest in McDonald's. So the next thing that I want to do here is, I can take this off or I can leave it, but I'll take it off just to keep things simple. Now I want to compare it to a competitor. Who does McDonald's compete with that is publicly traded? Like, I don't think Subway is publicly traded. However, I do know that Wendy's is publicly traded. I know that Wendy's is one of their biggest competitors. So I can compare these two and say, and ask myself the question, is McDonald's doing just better than the market, or are fast food chains just doing well overall? And at least in the case of Wendy's, McDonald's is a clear winner over the last year. McDonald's in 6 months is a clear winner again. And this says there's something special about McDonald's, okay? And I'm not talking about the hash browns. There's something, McDonald's is doing something well. You can see that something happened. Again, here we are again in March of 2022. And these two started to split ways for whatever reason. So these are the two things that say, okay, I know the business, great. The performance is good enough. I would now decide to add McDonald's to my watch list. I'm going to do that right now. Okay, so now it's on my watch list on Public. You can go and check that. You'll see that it's there. Because these are two things. I understand the business. I see it's performed well. Great. The next step here, and this, I guess we can move into the third step. So we've kind of compared how the stock is doing. We understand what the stock is doing. The third one is gathering more information. What are the other things that I should know about McDonald's before investing? Now, there's several ways to do this. I've talked about this before. You can scroll down if you're on the Public app, and you can do this anywhere. You can just easily go to Google as well and start to read a few of these articles. Now, here's the thing. I don't select these articles. You don't select these articles. I don't know who wrote these articles. There could be, depending on the publication, a little bit of bias here. So I don't rely on this and say, well, this says it's a safe dividend stock to buy in September. I'm not just going to buy it off of that. However, what I do like to do is compare several of these and start to make my own determination. Another tool that I do use, I did get this from Public Premium. We can talk a little bit more about that, but this is a resource called Morningstar, and Morningstar has deep dive analysis on what these companies do. They give you a good description, and then what they think about it. But this is going to give me more information here. So it gives me rather strategy and outlook, and tells me, hey, since 2015, there's been a turnaround. right? Processes have evolved since then. And I would read into this and then see how this makes me feel, and if this helps me to make a better, more informed decision, and then make my decision from here. The last thing, this will be step 4, is looking into the financials. So if I'm going to take a step back, if it's going to let me just go back, I'll scroll to the top real quick. Okay, so if I'm going to do a quick recap of all these steps before I go into the financials. Okay, so step 1, understand the business. How do you understand the business? Go find the annual report. You can Google company name, annual report, type in the year. Boom. Okay, you can read the description. It's usually no longer than 3 pages, and that's for a really complex company. Usually you'll see here, it can be done within a few paragraphs. So that's number 1. Okay, I want to understand the business. The second thing is check in on performance. Is it doing well compared to its competitors? Is it doing well compared to the market? That's number 2. Number 3, read recent news articles and analysis about the company. You're not looking to have these to sway your opinion, but you just want to get different pieces of information. So just by looking at the headline, which again, you want to read these, you don't want to just look at the headlines, but I can tell this is a dividend stock, right off the bat. At least it's a dividend stock. So if you're into dividends, that might be a box to check for you. There are bond offerings here. That means they're going to issue debt. Might be something I want to pay attention to. All day breakfast is not returning in October. This is news to me. I didn't know that. I'm upset about it, but it's here. So I just want to get different pieces and start to understand what is going on here. McDonald's is fighting a California bill that will support fast food workers. Interesting. I would probably really read into this and see how that could impact the company. Could this be more expensive? Could it hurt the bottom line? Could it help the bottom line? Could it help them retain more employees? Could it, make people want to buy and shop more at McDonald's because they are supporting their employees? We'll see. Right. But these are the things that I want to read just to give me some information, more information, and to help me form an opinion. I don't want to form an opinion for me. I want it to help me to form an opinion. So after I've done that, and you can also read into these Morningstar reports. I do enjoy them, but again, these are other people's opinions. These are other people's thoughts. So you don't want to take it blindly. You never want to take these blindly. It's best to kind of form your own opinion from the performance first and from your understanding from the annual report or the quarterly report first, and then start to compare the news in some of these reports. So after I've done that, I want to go and look at financials. Now, you can get this exact same financial information in a bunch of different places. You can get it from Yahoo Finance as well. I'm only showing you the Morningstar one because we were already on Morningstar earlier. So what I'm looking at here, and we've talked about this before, especially the members only, I talked about understanding a balance sheet, understanding an income statement and all that. But what I'm looking for here is this is the revenue by year. And we can see in 2021, obviously 2022 is not over with yet. It's up to 23. I'm assuming this should be billion. I just want to double check here. Okay. Yes. Yep. So USD, US dollar, and then bill. So we got 23 billion in 2021. It was down to 20. If actually we can go from left to right here. 2012 was 28, 27. And it's not all that consistent. In fact, it's been falling consistently up until 2019, shot up to $23 billion in revenue in 2021. So this is interesting. Just interesting here. I can look at margin. Margin it's important. This is, again, the difference in percentage between what you make, what you pay for that item and what you sold it for. High margin is a great place that you want to be. I can't say that I have a specific number for that, but I can see here that they're making a lot more. So yes, like the revenue may not be as high as what it used to be, but I can see that their margin is big. It's gotten bigger. So 52% on margin is interesting. So I'm just throwing it out there. That's interesting. It is something that you can make, quote unquote, less money, right? You only made $23 billion, but you kept a lot more of that because your margin was a lot higher. So just something that's interesting here. So you can continue to kind of read into these things and see what makes the most sense for you and whether or not you want to invest in McDonald's. But essentially, that's it. You want to understand, again, and we'll start from the top, what does the business do? What is it that they do? How do they do it? And this is going to give you some important facts and information here. That's the first step. The next step, what is the performance? What is the performance compared to the S&P 500? What is the performance compared to its biggest competitors? And then I want to start to read the most recent news about what is going on with the company right now. And I can do all of those things here. I can do it at using a Morningstar report as well. And then lastly, what are the financials? Is the business solid? Obviously, again, it's McDonald's. We know that answer is yes. And we can start to make that informed decision, and that's what's going to help you to be a better investor. So that is my process that I can boil down in 15 minutes. You want a deeper dive, and you want like even more information, then just let me know in the comments. We can either do a members only video, we can do just one for everybody so that you can learn a bit more about how this process can work. I'm telling you, as simple as this is and as easy as we explain this in about 15 minutes, this is the work that most people do not do. Okay, it's like most people can't just say, hey, I understand that yes, McDonald's is not making the same money they were making in 2012, but they are more profitable, and they're more profitable because of that margin. They're not able to tell you how the franchising model works. They're able to tell you how well the company is doing compared to others, right? This is that research and that level of information that you do need to become a much better investor. One other thing before I go is you can see here, this is very similar to the same information that you saw on Morningstar. You can get this for free, right? Income statement right here, total revenue. We've got 23 billion, which is the exact same number y'all just saw. They rounded down, but 23 billion, 19 billion, 21. So this is that total revenue. You can see gross profit here, and notice that the profit is a little bit better, even though you made less money. Now, if you want the premium version, you have to go to get more years. You can go back here, but gross profit, this is before taxes and everything, 10 billion, 11, 9, and then 12. So just throwing it out there, this is another way that you can find the information. Morningstar is not the only place. It's just I can get two pieces of information in one. So that is it for me. I apologize for putting this out a bit later than what I normally do at a conference called FinCon. So you may see pictures of me and other financial people that you may know on Twitter and other places this week. My voice is just a little shot. It's a lot of speakers and loud noises for me to yell over. So apologize for that, but do want to make sure that we get our content, and hopefully I can get this up by midnight. So I will talk to y'all later. If you have any questions or comments, feel free to let me know in the comment section below. All right, that's it for me. Talk to you later. Bye.